Traders, Anthony here. In this video we're going to take a look at the dollar index. As most of the currencies are either correlated with or inversely correlated with the US dollar, it's fitting that we take a close look at the dollar index and see how it's stacking up, and that will give us some clues as to some opportunities with other currency pairs. So with that, let's get into the video. So I'm constantly referring to the DXY for clues as to the strength of the US dollar. If we have a look at this on the daily time frame, we can see clearly that this is under pressure to a degree. So we have these lower highs, lower lows. We have a break of market structure right here. So these lows have been taken out. So on this time frame, the momentum is definitely more bearish than anything. We have had this pullback. So let's just get a bit closer to that and see what the charts are telling us. So go down to the 4-hour time frame. So there's a couple of things about this. First of all, we've got this trend here, and we can see that this move has kind of shifted gears somewhat. If we pick up the Fibonacci and we pull it from high to low, we have price pulling back into 78.6% on the Fibonacci. Right, so this is actually quite a bullish move here. It's an aggressive pullback, and the question is, are they only hitting these stops up in here to be able to pair their orders short, or is this looking to actually trade a bit further north? So this is giving me a little bit of a cause for concern, mainly because the Fibonacci, 50% of the fib, if we consider this trend here, for example, and we pull a Fibonacci from high, well, down to this low here, see how it's pulled back into the 50, the red zone here? Right, so if we grab every one of these price swings, there's a swing high, swing low. The momentum was quite strong, bearish, and the pullback was fairly shallow. It didn't pull into the 50. Right, so we're just looking at the strength of this pullback and the momentum, right? So we have a look at it, the Fibonacci retraced from here to here. See how it hasn't quite pulled into the 50% until we get to this level down in here. We've got this swing high, swing low, and it pulled right into the 78.6. And then if we grab, we can take this entire swing, and we can see clearly how this is pulled into the 78.6. So a deep pullback into the Fibonacci always gives me a little bit of cause for concern, given that the momentum is starting to shift a little bit. So we're seeing some bullish price action to a degree, or momentum, bullish momentum more than anything, starting to come into play. You need to take that into consideration. This could pull back further. See how we have over here, if I have a look at this break of structure, I'll just mark up these lows. See how we have this flat base here, relative equal lows. Okay, so that is another sign that gives me a little bit of, a sense of caution more than anything. So we have like a double bottom or equal lows, for example, and then it pushes down into this liquidity. So we have this liquidity pool under here. Anywhere where you see, a double bottom with a move under, you want to just be a little bit careful, right? So we've got a combination of this double bottom, a dip down into the liquidity that's resting under the double bottom, paired with this trend line here being taken out. Okay, so we have a shift in the trend here. Bullish shift. Be careful at this level. So we don't know whether this is going to actually trade south or it's going to look for some of these levels up a bit higher. So with that in mind, you want to come down to a lower time frame and wait for a clue. Right? So this could trade in either direction at this point, given the price action that we're looking at here on this chart. So the clues that you want to watch out for will be, it's currently ranging sideways on the 15-minute chart, so we're going to need to wait to see whether the highs get taken. Right, you can mark that up. So we're in the Asian session, so it's currently the Asian session range. We're going to be heading into the London Open, and this is either going to trade north or south. So you want to watch for either the break north, retest and fail, in which case hopefully we see more upside, or the break south of this Asian range, retest and fail. Okay, so I mean, given that this trend over here has been taken compromised, we don't have a real direction at this point. Right, so that's somewhere to land. Okay. It's hovering in no man's land at the moment, and until we see how this trades around here, around this current Asian range into the London Open, we just got to sit tight basically and see this thing, wait for it to unfold to give us clues, and then that will open a whole bunch of opportunities with the dollar pairs, correlated and inversely correlated pairs. All right, guys, so that's where we are with the dollar index at the moment. So just sit tight and see how this behaves around the London Open today. That's it, guys. With that, I hope you have a great day. Safe trading, and comment. I'd love to hear your thoughts on this. What are your opinions? What do you think? Leave a comment below, and yeah, have a great day. Safe trading, and we'll see you in the next one.